Morning, guys. It's Tuesday, April 29th, 5:25 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 1 3/4 at 481.5. July soybeans down 2.5 at 1060. July Chicago wheat up 2.5 cents at 533.5. July Kansas City wheat up 1 at 540 3/4. July spring wheat up 2 3/4 at 599.5. We very rarely start off with the wheat market, but let's do it today.
So wheat futures tumbled on Monday amid forecasts for more rainfall across the plains. The July 25 SRW wheat contract dropped 14 cents, settling at 531 per bushel, while the July 25 HRW contract declined by roughly 11 cents to close near 540 per bushel. The losses followed much-needed rainfall across parts of the plains over the weekend, with forecasts calling for more precipitation over the next 10 days. Some parts of Texas and Oklahoma could receive as much as 6 to 8 inches of rain. Meanwhile, corn and soybean futures were mostly unchanged as traders continued to monitor potential export disruptions stemming from Trump's trade war with China.
We are often accused of not talking about wheat enough. So, for those of you, the accusers out there, this is for you this morning. Let's look at the last 7 days of rainfall. HRW wheat country's done fairly well. It wasn't everywhere, it wasn't super widespread, but some decent rain amounts and conditions did improve according to USDA yesterday. We'll get to that here in a minute. And if you want to look at production density versus where the rains fell, I mean, Kansas, the western 2/3, Oklahoma, North Texas, Eastern Colorado, a little bit of Southwest Nebraska. That's kind of the big time winter wheat producing areas, and those are your HRW areas that saw the rainfall. There's a little bit more rain coming over the next 7 days, at least according to the government weather model. To go to the technicals, they don't look good. This is a daily July Kansas City wheat chart. We traded into fresh life of contract lows yesterday. Ugly, ugly look. I pulled some monthly continuation charts here to give you guys a little bit more context. So here's HRW wheat on a continuation basis dating back to 2007. 512 was your post-COVID low. And I think that the post-COVID lows could mean something. COVID was a world-changing and market-changing event. So I think that the lows that were posted post-COVID could be important. And we're now sitting, as of this recording, we're 14 cents away from your post-COVID low in HRW wheat on a continuation basis. You hope that that area holds. To look at spring wheat, the chart's a little bit sloppier here because you had that spike up to $24 back in 2008, I believe. But in any case, you're still about 60 cents from your post-COVID low in spring wheat market. In the SRW wheat market, we're 22 cents from post-COVID lows this morning. So you hope that those sort of levels can hold. Your 493 in SRW, your 537 in spring wheat, and your 512 in Kansas City wheat. To look at some supply and demand type stuff, USDA painted us a more bearish picture of the U.S. wheat situation earlier this month. They reduced their export projection for the current marketing year while simultaneously increasing their import projection for the current marketing year. Yes, we do import some wheat. It's a small amount, but I think it was 10 million bushels, which is substantial-ish, I suppose. The world situation is not bearish relative to prior years. As a matter of fact, the projection for the end of the marketing year is that the global supply and demand situation will be the tightest since the 14-15 marketing year, yet you wouldn't really know it by looking at the market. So one of the reasons we don't talk about wheat a ton is because it doesn't make any damn sense most of the time. And maybe looking at this world stuff would be an example of that. But the market acts poorly. Hope we can hold here.
The Trump administration will allow nationwide sales of E15 gasoline this summer. The EPA approved the move through an emergency waiver, which exempts E15 from rules that normally limit its sales starting May 1st. Fuel waivers, such as this one, are typically used to address supply problems caused by natural disasters. Officials say offering more fuel options will help lower prices, cut reliance on imported fossil fuels, and support American ag and manufacturing. E15 is already sold at over 4,100 gas stations across 33 states. However, it is still banned in California.
I believe, correct me if I'm wrong, they've done an emergency waiver for summer E15 every single year since 2022. Emergency waiver in 22, emergency waiver in 23, emergency waiver in 24, and now an emergency waiver this year. They may as well just do it every year if we're going to jump through all these hoops to do emergency waivers every single year. There was a study. People are going to talk about the impact on demand for corn via ethanol. McKinsey Group is a big multinational consulting company, and they did a study on this in 2022, I believe. And this is a quote from the article. I'll read it to you. And there's a graphic here on the screen. In 2021, the U.S. produced a total of 15 billion bushels of corn. The additional 15 million gallons of ethanol that will likely be consumed by E15 this summer equates to 5.6 million corn bushels, an increase of only 0.04%. Annual U.S. corn production typically fluctuates by 500 million bushels per year, ranging from 13.6 billion to 15.1 billion since 2016. As a result, the additional demand created by E15 is unlikely to have a noticeable effect on supply. And I believe that to be true. I don't think summer E15 is going to put a dent in the corn supply base. I don't think you're going to see anything reflected on the balance sheet. It's not enough. And I would love this to be a bullish story, but they've done it every year for the last 3 or 4 years. And I don't ever remember a big spike in ethanol production. You guys probably don't either. So, I mean, it's good news. They should just do it every year, but the impact on demand for corn in the United States should be very, very minimal.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
If you're working, and I know you are, this is the video we did with Pete yesterday was like an hour long, and he talked about the Chicago Board of Trade lingo and concepts. We went through all sorts of different things like the month codes, the funds, clearinghouses, delivery concepts, all sorts of different things. We had the video chapter marked, so you could kind of go through and pick out whatever you wanted to watch or listen to. But I would highly recommend this if you guys are looking something to listen to. It's kind of educational and enlightening, something a little bit different. Last week, Shay was on and he discussed soybean economics and early planting and the margin impact. I know a lot of you guys have shifted to planting soybeans before corn, which does make sense in many situations, but not in every situation. And Shay kind of went through and talked about how this looks with regard to farm budgets. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month information only subscription. We want to send you our emails twice a day. We want to send you our premium videos. I want to send you my cash grain marketing recommendations. We create a ton of content that goes out every day to our premium subscribers. And to be quite honest, the premium subscribers are the only reason we're able to do the podcast. We lose a ton of money every month, every year doing the podcast. The premium subscribers are what allow us to do this. So if you're not a premium subscriber, you should check that deal out this morning.
U.S. corn and soybean planting is ahead of schedule. Corn planting was 24% complete through Sunday compared to 12% last week and 22% on average. States that are 30% planted or better include Iowa, Kansas, Missouri, North Carolina, Tennessee, and Texas. States with 10% of the crop planted or less include Michigan, North Dakota, Ohio, Pennsylvania, and Wisconsin. Soybean planting was reported at 18% complete nationally versus 8% last week and 12% on average. States that are 25% planted or better include Arkansas, Iowa, Louisiana, Mississippi, Missouri, and Tennessee. States with 10% of the crop planted or less include Indiana, Michigan, North Dakota, South Dakota, and Wisconsin.
The planting numbers, the progress numbers for corn and soybeans were slightly below what the trade had expected, like 1% below. You're just splitting hairs. There are no real obstacles to corn and soybean planting on a national scale. There's certainly some pockets that have some hiccups. Maybe had some rain or some nasty weather. Over the next 14 days, this is a map from our friends at Crop Profit. U.S. corn country will see 89% of its normal rainfall. So less than normal is probably a good thing during planting. Now you get into June or July, you're going to want to see that number above normal in order to produce, a trend crop or something close to it. But for planting, this is pretty good. And you look at the Western Corn Belt in particular, you look at Iowa, you look at Minnesota, you look at South Dakota, even parts of North Dakota, Eastern Nebraska, even at the Eastern Corn Belt, you're looking at normal to well below normal rainfall. So there shouldn't really be any obstacles here. Let's go to wheat.
As of Sunday, the U.S. winter wheat crop was rated 49% good to excellent nationally versus 45% last week and 41% on average. The rating exceeded analysts' expectations of 47% and matched last year's rating for the week. The crop is 27% headed nationally versus 15% last week and 22% on average. The U.S. spring wheat crop is 30% planted versus 17% last week and 21% on average.
Spring wheat planting moving along, no real issues there. the winter wheat ratings increased, and maybe the trade saw that coming because of the rainfall. That should not have been a big surprise to anybody. I think the rating was a little bit better than expected by a couple percentage points. But again, you're kind of splitting hairs. We knew it was going to be better.
China is claiming to be no longer dependent on U.S. grain and oilseed imports. Amid escalating geopolitical tensions and the ongoing trade war, China has shifted away from U.S. grain and oilseed imports. The nation is increasingly relying on imports from South America, as it typically does this time of year. Massive soybean shipments from Brazil, Argentina, and Uruguay are expected to surpass 30 million metric tons in the second quarter, a record for that time period. Chinese officials have indicated that American grain and oilseed supplies can be easily replaced on the global market. However, recent delays in Brazil's soybean harvest caused temporary supply disruptions, forcing some Chinese processors to suspend operations.
Yeah, China doesn't need U.S. grains or oil seeds right now because we don't ship a lot of soybeans in particular this time of year. We ship soybeans from October through January, and then soybean shipments fall off drastically after that. I used to be able to make these charts and make them look good, and this is a crappy screenshot from our new LSEG platform, which replaced Thomson Reuters Icon, and you can't pull the data and sort it. It's a totally unusable trash product, and they won't work with me on it. So again, if you guys have some better options, especially for charting, let me know. I'm going to email them and be very angry about this chart in particular later this morning, again, which has become a routine for me.
U.S. corn shipments were strong last week, hovering near the upper end of pre-report expectations. USDA reported that 65 million bushels of corn were inspected for export during the week ending April 24th. The print was down 4.2% compared to the previous week, but up 27% versus the same week last year. Soybean shipments were reported at 16 million bushels. The print was down 22% from the prior week, but up 59% compared to the same week last year. Wheat shipments surpassed expectations for the second consecutive week at 24 million bushels. The print was up 27% from the previous week and up 29% versus the same week last year.
Absolutely fantastic across the board. Corn shipments, very good. Soybean shipments, good seasonally, and wheat shipments, pretty strong as well. Nothing to complain about there.
The U.S. and Mexico have reached an agreement on the eradication of New World screwworm. Over the weekend, USDA Secretary Brooke Rollins threatened to close the border to Mexican feeder cattle imports, citing Mexico's failure to help contain the outbreak in the southern part of the country. On an annual basis, the U.S. typically imports between 1.1 and 1.2 million head of cattle from Mexico. A border closure would likely have had a bullish impact on the market by further tightening already limited cattle supplies. New World screwworm has been eradicated from the U.S. since 1966.
It appeared to me as if cattle futures perhaps opened higher on the screwworm news yesterday. Does this mean that we have to open lower today?
Oh, possibly, but I don't think this was a huge deal to start with. I don't think there should be like a huge market reaction to this headline.
It wasn't huge yesterday. I think some people
Right.
thought that maybe we opened higher because of that. Maybe not. I don't know.
Yeah.
What did cattle do yesterday?
Cattle futures were higher. Live cattle were 30 cents to a buck 40 higher. Feeders were 35 cents to 127 higher. Box beef prices surged to a new record high for the year. Choice was up 622 at 342.70, and Select was up 501 at 325.12
Is that a new high for this year or all-time record high?
just for this year, 2025.
I got you. Okay. Outside markets this morning, Dow Jones up 150, S&P's flat, bonds are about flat. US dollar's up a little bit. Crude oil is down $1.05 in the June WTI, $61 even last trade. Have a great day, guys. We'll be back on Wednesday.